Wells Fargo just put out a warning saying that they believe a recession is coming to the housing market because of the higher mortgage rates. Now, they're not the first bank to say this. Bank of America also in October put out a statement saying that they believe that there's going to be more turbulence coming to the housing market. So what I want to do in this video is three things. Number one, I want to go over what is this 1980s style housing market recession that Bank of America and Wells Fargo are talking about. Number two, I want to talk about Wells Fargo's statement. And number three, I want to talk about what this means for you. And if you stick with me till the end, I have a little gift for you, which is this free ebook that you can download, How to Build Wealth as an Investor. If you stick with me till the end, I'll show you how you can get a copy of this ebook for free. Let me start with point number one. What happened in the early 1980s? Because you heard Wells Fargo and Bank of America talking about this 1980s style housing market recession. The 1970s was a tough economic period for the United States because the United States was facing high inflation, they were facing a slowing economy, and they were also facing higher unemployment. This was called stagflation. So it was a tough period for the United States. And now if we translate what happened now in the economy to the housing market, let's take a look at how the mortgage market was impacted based off of what was happening in the economy. Because in the early 1970s, if you wanted to go out and get a 30-year fixed rate mortgage, you were paying around 7% for a mortgage. But then remember, the United States was facing a lot of high inflation in the early 1970s into the late 1970s, and part of that was due to the fact that in the early 1970s, the United States was facing oil issues and the dollar was severed from the gold standard, so more money was printed, which created more inflation. This led to, in the early 1980s or 1980, mortgage rates shooting up to around 13% in 1980. And the reason why was because the Federal Reserve Bank had to jack up interest rates in order to fight the high inflation. Sound familiar? Well, by the time we were in 1982 in the United States, mortgage rates were now at close to around 17%. So this made it much more difficult for anybody to go out and buy a home because it cost you a lot more money to go out and buy a home, which caused a cooling of demand in the housing market. And again, the reason why the Federal Reserve Bank was doing this was as a way to fight the high inflation problems that the United States was seeing. In fact, in the year 1980, there was an article that was published that dove deep into the state of the housing market. It was titled, "Bottom Dollar for a Tip-Top House." And what it said, I'll just highlight it for you, is the high mortgage rates have dampened demand for houses at the moment, giving buyers a small edge over sellers for the first time in years. In other words, when you had this period of lower mortgage rates, and I know 7% mortgage rates don't look low, but during this time where you had lower mortgage rates, everybody was trying to buy a home, which made it difficult for buyers to really get any concessions or any negotiating room because we had all these buyers out there, so much demand. But then when mortgage rates jumped up to here, now you didn't have that many buyers out there. And the buyers that were looking for a home, well, now you were one of the few. And because now there were less buyers out there, you had more negotiating room when it came to you actually negotiating the home that you wanted to buy. And then this article that was published in 1980 even talked about what sellers should be doing during this period of high interest rates. Take a look. If he can, a seller should hold off until May or June. Again, this is 1980. By then, mortgage rates should come down a little. And then after that, pent-up demand will drive prices back up. Now, a couple points that you want to note about that, because this article was published in 1980 and it says that if you want to sell your home, just wait it out because when mortgage rates fall, you're going to be able to sell your home for more money. Well, it took years before mortgage rates actually fell. So understand that you can't always predict where mortgage rates are going to go, even if you have the news saying the mortgage rates are going to be falling soon. Number two is that they were talking about this pent-up demand. People who want to buy homes, but they're just waiting for these lower mortgage rates. Well, again, it took a long time for mortgage rates to actually begin falling. It wasn't until 1985 that mortgage rates fell to around 13% again. And then it wasn't until the year 1990 that mortgage rates fell down to around 10%. So it took time in this instance for mortgage rates to fall. Now, what's going to happen this time around, nobody knows. But this is where now Wells Fargo and Bank of America are alluding to what happened during this period in the housing market, saying that this could be happening in our housing market this year. Now, what I want you to understand is don't take any random bank's word as to what's going to happen in the future. You got to take everything with a grain of salt. Don't randomly listen to a random guy on YouTube, a random bank, or really anything. Make sure you do your own analysis. I just want you to understand what Wells Fargo and Bank of America are talking about when they make these statements. Now you can start to see the similarities between this and kind of where we are now, because in the years 2020, 2021, 2022, we saw very low mortgage rates. then come the year 2023, and now we have very high mortgage rates. Now, 8% mortgage rates are not high compared to these numbers, but compared to what we've seen over the last couple of decades, 8% mortgage rates are very high. But what Wells Fargo is saying is that the cost to own a home has risen significantly faster than wages. Take a look. The increase in monthly payments has far exceeded growth in median family income, which was up 5% over the same period. In other words, housing affordability has really been getting hurt because not only are home prices still very high and in some neighborhoods still rising, but also mortgage rates have been rising very quickly. These both together have made housing affordability come down while incomes have not grown fast enough. And this is where now you've seen more and more organizations start to get a little bit more desperate. For example, the Mortgage Bankers Association, along with the National Association of Realtors, along with the National Association of Home Builders, all came together to send a joint press statement, a joint letter to the Federal Reserve Bank, essentially asking or begging them to stop raising rates and maybe even consider cutting rates soon, because the higher mortgage rates, the higher interest rates are hurting mortgage bankers. They're hurting realtors. They're hurting home builders. And the reason why is because when you have all this high interest rates, you have buyers who are less interested in going out and buying a home. And if people are less interested in going out and buying a home, well, that hurts the commissions for these industries. And this is where now what the Federal Reserve Bank is doing is they're keeping interest rates high to fight inflation. Remember, that's exactly what we saw happen here. In the 1970s, we had this period of very high inflation. And to fight off this very high inflation, the Federal Reserve Bank had to raise interest rates significantly, which then raised mortgage rates. Now, the impact of these higher mortgage rates was to hurt demand in the housing market. Now, while it took some time for that demand to really impact the prices, what that did allow was it gave buyers more negotiating room. How much? Well, what the articles talked about, because I wasn't around during this time, was that buyers were able to negotiate sometimes 10% off of asking price. Now, even 10% off of today's asking price is still higher than what we were in home prices a few years ago. However, it's not the type of housing price crash that we saw during the 2008 recession. And so this is where now it's important for you to understand what the banks are saying and what's going on with the mortgage market, because, well, there's a lot of opinions in the housing market. There's a lot of emotions in the housing market, and understanding, well, how does history help you understand what's happening now and what could be happening in the future? Because we are seeing higher mortgage rates today. We are seeing demand start to cool down. And if we start to see supply lift up a little bit, well, that can give buyers, if you want to go out and buy a home, a lot more leverage, a lot more negotiating room. Because if you don't have that many buyers, but you have more sellers, now buyers have the upper hand because sellers want to sell their home, but there's not that many buyers out there. So higher mortgage rates can actually give you more negotiating room as a buyer, although it can make housing less affordable. Now, you have a lot of people saying that we're going to see mortgage rates fall in the near future. And these are all opinions. Could it happen? Absolutely. Could it not happen? Absolutely. We had articles in 1980 saying that by the middle part of 1980, mortgage rates will fall. Well, it took a while to actually see mortgage rates fall. And that's why I want you to understand that sometimes, well, the people that have the biggest mouths aren't always correct. For example, the Federal Reserve Bank said that inflation was transitory back in 2020, 2021. So remember that you have to make your own financial decisions. Don't just blindly listen to a random guy on YouTube or really anybody else, but work to build a financial education that we understand what's actually going on with money. Now, in the beginning of this video, I promised you that if you stuck with me to the end, I will show you how you can get a copy of How to Build Wealth as an Investor for free. This is an ebook that my team at Briefs Media put together. If you want to get a copy of this ebook, all you got to do is click the link down in the description below or go to briefs.co/ebook. And in this ebook, not only do we go over how to build the mindset of a successful investor, to how do you save your first couple $1,000s and pay off your high interest credit card debts, but we also go over how do you start investing your money. What are different ways to invest your money? How do you generate cash flow? What are different investing strategies? To how do you spend your money smartly? To how do you earn more money? To how do you protect your assets? There is a ton of value in this ebook. You can read this ebook for free. So if you want to get a copy, all you got to do is click the link down in the description and get a copy of this ebook for yourself. Read this title from Fortune magazine. The U.S. housing market has gotten so expensive that incomes would have to jump 55% to make buying a home affordable. America is currently experiencing one of the least affordable housing markets of all time. Now, there are three things that could happen to make housing more affordable. Either incomes could rise drastically,